Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome to another exciting edition of the Power Trading Hour. And I'm starting to get pumped up. It's been kind of a tough road to get to where we were. It very strange to wait for the last day of fund buying for all the money to come in. Usually doesn't happen quite this way. But certainly we've had kind of a weaker bounce. I thought maybe we'd get up to 40.80 by today, and that we didn't really start on Wednesday. Had me a bit perplexed. We are bouncing today. What do we have? 40.33, is that the... 40.32 and 3/4 on the S&P cash today. The real big story, though, is going to be what we see in volumes today, because this is really where you needed to get a good indication that this wasn't just fun and games, that we actually were going to break out of some kind of trading range. The first thing to do is probably look at some of these bigger ETFs and see what the volumes look like. I was pretty much speculating that there was no way I wanted to go in today being short. I was curious about being long. Options had actually been pointing up. They're a little down for where they were at. I didn't like it because it didn't, as I said earlier, start from Wednesday or even Tuesday as they have in the past. But we have kind of a nice little setup here where we've made some highs. We've made them on lighter volume. Now, is this going to be in the indexes, the big move? I'm thinking more of these stocks that are super extended. This is where I start watching for stocks like Tesla to have light volume moves higher and the shorts kind of give up over the next few days. But there are a lot of other stocks like this. We'll probably go through them later in the show. It's tough. To see what we have out here. Okay, first question of the day is Mobileye, so we'll get to that. MBLY, so I don't forget about it, because we all know my memory's the second shortest thing I have. So you got Mobileye, got a nice bounce, not anything in the way of volume. As far as, I don't know, just my thoughts on Mobileye. I don't know if you're just talking about the charts or remote driving in particular. It is starting to look like, this is a lot more like they say the technology of the future and always will be. Just a laundry list of problems that self-driving cars still have. And there's, this is going to be a technology that maybe 5-10 years down the road is ripe. But right now, I think you've got it. The problem is you can't have a car that drives correctly 98% of the time and kills people 2% of the time. Even horrible drivers have a much better record than that. So that would mean that there was a 1 in 50 chance, or every 2 months, these people would mow somebody down. So you've got to have something that's kind of along the lines of a human driver, which is about a 0.01% chance of an accident going out each day. We still get into accidents. But these things, Mobileye, a much more expensive version than what Musk has really put together. The question is just how much are you willing to spend for it? A lot of people have been looking at the LiDAR versions. It just becomes very problematic for a lot of these to figure out, just what are all the edge cases. So in the short term, Can you sell the sizzle? Maybe you can. I would be very wary of any stock right now that closes back down below the 3x3 in the coming few days. So let's take a few looks at it. Okay. So we looked at that. Let's look at some of the other ones out here. I wanted to check on Apple. Looks to me like they want to pin that to 150 today. Again, you're back up into some of these candles with fairly lighter volume. This wasn't actually a bad pattern on Apple. What you don't have is the follow through today. And as I said, now what you really have to worry about is this huge move up, which is on Apple 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So you had 22 days above the 3x3, probably the same on a 9-day. Let's take a quick look at that. Yeah, you can get one more day out of the 9-day. Anyway, so you get that. You get a little bit of noise underneath that. You kind of get back up, and then you kind of have, 7, 8 days below it. Now you have your first pop above it. If it was going higher, it's an ABC. You should start seeing a lot of volume today and not a quiet day on the Western Front. So I'd be very nervous when we go back into like the 21st on Apple. This gap down on 58 million shares. You got about 41 million shares now. So, you're probably looking in that low volume area. And this is, of course, one of the better stocks in the marketplace, not one of the worst. Microsoft, same kind of thing. You pop back above it today, but you really don't have much in the way of energy. Could you get 1 or 2 more days up, maybe something like 260? You could. This is not a real good double repo pattern. There are other ones that I continue to look at, but that would be it. Question on Planeteer. Again, you really want to see now when you pop back up some volume in it, and that's why I'm saying that it's more the market than anything else. You have a beautiful Wyckoff pattern to buy and a nice one-day pop. But with 31 million shares, you really are coming back into this candle the 21st that has 65 million shares. It's just very tough. Now, I can't always predict the future. But what I can say is the scenario that I am looking to, and that is light volume in the next day or two, early next week, and then any closes back below it generally would significantly suggest a move back down to 3,600 on the S&P 10. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we had a pretty good question, and I heard I got cut off at the end. But on a double repo pattern like this, the way it's set up, it's the Joe DiNapoli pattern. I learned it very early on. He's got a book. It's about $180. One of the things that many people don't take out of it or haven't, because it's such a long pattern, it takes so long to set up. And generally, a lot of people are focused on the short term, the next day or two, don't see the bigger pattern developing out there. And again, you have to, and the other thing is people tend to jump before the iron is hot. This is a pattern that you have to give up a little bit on the high end to know that you're right. So we'll talk about it today, but ideally, or let's put it this way, things change over time. And whether it's Tim Ward's original work on trend and those numbers, they've wildly changed in the 25 years since he wrote his article on a big tick being 400 or 500 points, and now it's 2,000 or 2,500 or 3,000. I mean, a lot of those numbers that you get used just keep getting inflated over time. And certainly the same thing is kind of what we have now in the market. That is, you have these huge things. I actually have a little scanner I wrote to look at double repo patterns. We'll go through a few of these. I actually needed to get the list here so I could go through them because I'm actually very interested. Is that right? That can't be right. Let's see. From a clipboard. Okay, didn't get anything there. Let's go back here. I'm pretty sure I have had it here. Any chance I closed it? Don't think I closed it. Did I accidentally close it? Oh, rats. I'm going to have to run it again. Okay, I'll do that. A few other questions while I'm getting prepared for that. This is the movers. I don't know how I did that. Okay. No, I even some very, very good traders I know this week have been a little bit perplexed because this is a very tough pattern, and it makes you, when you get ready for these setups, it does tend to try men's souls and women's too. So what we see in these, but I'll go through them, I guess, in the next segment. I'm running the scan again just to get started. But that, yeah, it's a much bigger pattern. And of course, most of the time, Joe DiNapoli didn't use this in the equity market. He used it in the commodities markets. But it is powerful. But now I kind of start at 15 days and look at 25 days above a 3x3 or a 9-day. And that's, we've had some other ballistic kind of indicators in the market that people have used. I just like this one a lot better because one, just the small retracements like the 382 retracement, which may be a good trade. But this is one of those indicators that if it does pay off, it pays off rather huge. And we've shown it a few times over the years where we've had this setup. So let me see here. Okay, now hopefully I got this done. And we've got somebody that wants me to talk about the dollar too from the clipboard. Okay. Yes, I want to replace it. There we go. Okay, so I got that. So let's go over here and look at my eel mail and take a look at here. Isn't the dollar on a weekly toast? Let's take a quick look at Mr. Dollar here. I don't think so. I think the Fed and the Treasury are desperate to try to kill. I saw somebody talk about it yesterday. Kill volatility. To me, the action really smacks a great deal of these big guys getting in there and trying to keep this thing around the mid 105 area and try to stamp this down. And of course, we were kind of up in that area yesterday. We've come down, but really not that far. I think the most important chart we have to look at today is the TLT, because we were at a point where it could easily just continue down. Some people are going to say this is a island reversal, and it certainly is on the charts for the day. But yeah, you got to think that a handful of people probably got a little nervous, maybe got to the Fed and told them that they needed to slow the roll just a little bit. Maybe I'm wrong on this, but I do not think so. We gapped down, and we did so with volume. Today we're up on lighter volume, and I don't think that's going to change much of anything on the TLT. So I think there's two big levers that the Fed and the Treasury are pulling now, and it's on bonds and on the dollar itself. And, they're just trying to make sure that this thing doesn't turn into a 40-car wreck on the interstate in fog. So, okay. Okay, builds character. Okay. If it was easy, everybody would be able to do it. And we know just how hard it is if you actually try to do it. Anyway, nice pop here. Let's go ahead and start looking at some of these other ones, because these are the ones that I'm really interested over time here. Did I not get it? Come on. No, don't know why that's not there. Okay. Arch Capital Group. This is up for about 10 days straight. I don't see any move out here yet. ADMP. That's a good one to delete. That one is probably a buyout. ASC. Here's where you start seeing kind of the weakness. And the shipping companies, I noticed, had a ton of the shippers on the TD9. So they're probably fairly close to topping out. But this is kind of a pattern out here. There isn't a lot of money in this Ardmore shipping. But you are starting to see a little bit of light volume down here under the 9-day, the 3x3 displaced moving average. Another one, Acerto Therapeutics. This has been running really since the 2nd of February, so you've had a whole month really without closing down below it. We're going to go through some other ones out here to give you a good indication of just how many of these stocks haven't really been backing and filling. They've just been going straight up. And generally, you get huge corrections out of that. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we come back here, just, am my clock off or is it this studio's clock? Looks like the studio's clock is off a little bit today. Anyway, I had a bunch of questions to look at some stocks out here. Cadence Design System, you have a little pop-up here, no volume. As I said, there are more than a handful of stocks that gapped up with some decent volume and are good Wyckoff patterns. I wouldn't be short it. There's some other ones out there that have worse patterns. But again, you've got really a couple of days now to get some kind of volume coming back in on this gap up on CDNS, which is Cadence Design System. This volume today is ridiculous. Yesterday you had 1.5 million shares. Today you got 670,000 shares. And that's what I was going to say. This whole pattern, the whole idea of me saying I didn't think that the market was going to have a bad hair day this week, that the bad hair day next week is going to be on this bigger pattern, and why it tends to try men's souls so vigorously, and probably why it's a good way in the market, because everybody gets short, it goes against them, and then they don't have the heart to pull the trigger again in about another week when everything does set up the way it should. Anyway, Cadence Design Systems, I mean, not a bad pattern, but man, if you're going to stay in it, you're going to need volume really quickly. Another request is to look at Mosaic. You got a doji here probably making a high in this today. You got a doji on no volume. Yesterday he had 6.9 million shares, today 2.6. So I'd watch that. It's, again, probably not short, but it also suggests that you've probably topped out a lot of these stocks today. It may take a little bit more. Question about where the Qs are going. Well, you gapped down with 58 million shares on the 17th of February. You got 37.5 million shares going into 58. Could you get one more pop on Monday? Maybe. More than likely, I think that you probably roll back over, and we're going to start seeing bigger issues there. So I think that is all of them. Could you look at Cintas? CTAS. Okay. Just going sideways. I don't. IP parameter of the market. Correlator of the market at this time. It's just going sideways. So, my thought has been that we are in distribution and have been for a couple of weeks. It certainly looks like it to me. I think everybody's starting to get the idea that we are going to have higher rates, and the housing market's probably getting ready for its big downturn, along with the autos and a great deal of it. Whether we go into a quote official recession or not, things are probably not going to get better throughout the summer with higher interest rates. A lot of people were thinking that maybe China was actually going to hold us up. Now there's a lot of second guessing on whether or not there's enough juice in the China reopening to get the exact same thing. On Cintas, you're just going sideways. It looks to me like distribution. I hate everything today because of the light volume pops. And the reason is it's Friday, but it's also the last day of fun buying. If you can't get people to get in on fun buying day, that is one of the biggest red flags in the market. Anyway, I think that's about that. So we have anything else here? I think I got to everybody. If you didn't, request everything else you have. But I'm thinking that we're within 24 hours of a high in the market. It may not instantly turn on a dime, but I think it will probably have a real problem fighting the market higher next week. It may take a day or two as we kind of roll over. Okay. Let's look through the rest of these here. Acerto Therapeutics, ASRT. You got 3 days now of declining volume. I'm not going to be short a $6 stock, but I can do this all day. In fact, I've got probably 4 times as many stocks as I could go through in a really fast manner. ATI is interesting. Come on, B quarter. You have anything here? Lucora. See there? Do I have something else? There we go. BR. I don't know what this one is, but it's getting to that point where you had about 7 days of distribution with a little pop today with no volume. A lot of these are. Here's another one with Clorox. retesting a previous high with no volume today. Your big pop was on the 3rd of February with 5.2 million shares. You're into that today with 374,000 shares. So pretty big lack of volume. The CME group tried to hold a little higher today and hasn't. Very light volume too. These are days where with fund buying, you should have been able to see huge volume with all the shorts getting run out. That means that most of the shorts are out. That if there are shorts in the market, these are not people that are going to have weak hands. These are going to be the big guys of the street and more problematic. Coherent, it's been going sideways for a while. Popped today on almost no volume compared to yesterday. Yesterday you had 1.8 million shares. Today you got less than 500,000. Cody, COTY. This has been kind of going straight up again. I'm not going to be short a stock less than $30, but just look how long this thing has been going up a little bit, pretty much every day, going back to really the end of December on this. This one is always one that tends to go to heaven and hell. It's up at heaven, and it's got no volume today either. To do a CR there. Everything's just slow. Direction daily real estate. Now, I've been watching this one. As we say, the thing to do is count how many days above it. You get to 10 and really 15, and you've got something going above one side or the other. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days above it. You got a little bit of a bearish reversing candle yesterday. You're now back underneath the 3x3. Generally what you get is a couple more days. You get back above it, and then the next move below it. And of course, this double repo pattern, the idea is that you go back to where the whole thing started. And in this case, it'd be the first day that you closed above the 3x3. That takes you back to February 7th. And that's $40.48 or so. Now, is that going to be the end of the world? It's not. But, that's 20% off the real estate market there, if that does come to fruition. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, we had some good questions about the double repo pattern, and then so I've typed them in there too, just so that they're there. But the reason I like it better than the 9-day moving average is it's actually, if you're looking at the screen now, you actually see where it's going in the next 3 days. So you already have the numbers. In fact, in the Art of Timing Trade chart, you can click and see the number for each 3 days going forward. You kind of know where it is, but it gives you kind of a ballistic curve of if you pulled the trigger on a bullet, where would it go? And that's kind of, you get that already. If you're using Thinkorswim or Ninja, I've had people ask me in the past, both of those will have a setting in the simple moving average box where you set up, what you want, and it'll have something called offset. And I think one, you have to actually put in -3, and the other one you have to use just regular 3, and it will do that. It will push your 3-day moving average out on the right-hand side. But again, I don't use those, so it's not something I'm familiar with. If I want something, I tend to just write it myself. And put it back in whatever I use. But anyway, the idea is that you do get that. But the other question was, you get, let's say you get 15 to 20 days above a 3x3 or a 9-day moving average. You get a couple of days below it, maybe 3, 4, 5. Then you get a day above it. All you need is the next close below it. What you do is you short right there, and you put the stop right there too, because it shouldn't close back above that line. When these things work, you're going to have a good indication, and that is a big candle as it goes back through the line. So you have a big kind of engulfing candle generally, and you get big volume. And what it is you're watching the psychology of traders. They see the market going up on no volume. If that happens, I'm not making a prediction, I'm showing you a scenario. But generally, when you've gone up for so many days, at worst, you're going to go sideways and consolidate. But since this movement, especially the last few days, have been on nothing, and today we've got another day with nothing, my guess is Monday we get another day with no volume. They push it a little higher. You get the shorts to leave. You get the shorts to quit shorting, because they're all despondent now. Everybody was sure that the bottom was going to fall out. I was even a little worried. Options never really kind of blinked. I did not like the action. And I think what I was probably seeing already was what I am thinking that happens next week, that I think has got a pretty good probability. Maybe right now I'm looking at about a 70% probability. If you get the close back again below, and you get the big candle and the volume, generally your probability gets up to about 90%. So depends on what you're doing, but the nice thing is when you get that giant failure mode in the market, and you can catch it, especially if you have options, that's generally where you can make a lot of money to the downside. You don't get the just 2 or 3 days down and that's it. You get something that really moves fairly quickly. But my thought is that the way that we are set up now, we would sell off, and it may take 2 months, but we'd be back to about 3,650, maybe 3,600 by the 1st of May. But that is the bigger type setup. We have to make it through every day, and it is tough. But we're probably within a couple of days of knowing whether this happens. If it doesn't, then that's fine. But generally, I know that I've made absolutely some monster money. Probably the biggest, and I think I had a double repo on a biotech a few years ago. Also had it on the TLT back at like 148 or something, whatever it was. Was it a TLT? Thought it was. We've caught a couple of them in the newsletter. And, you know, the nice thing is that your probability is high that you can actually look at that as a much better chance than most patterns out there once you get the confirmation. Let's see, what else do we have here? Okay. Yeah. Yeah, it is kind of a ballistic arc. Yes, it would be a good time to subscribe. Okay, could you look at Skyworks, SWKS? I think that there's a reason why the market's starting to get nervous, but I don't want to harsh everybody's. What is it? Harsh their mellow? I don't want to harsh their mellow, but I think I know why the market's starting to get nervous. But it's nothing you can really say. You don't want to use a couple of words, and all of them are bad. Anyway, Skyworks Solutions, you've come back. You've had fairly light volume. You did close back above it. Again, these are good patterns, except for today. And that is that you needed, when you cross back up, you know, beautiful pattern. You pop on the February the 7th. You do so with 5.7 million shares. You never really go over that. You get everything in one day. And from time to time, I talk to Tim Ward about the idea of the buying or selling climax, and that's it. You got everything at once. Now, could the volume been even a little higher, and it would have been a little bit more apparent? Yeah. But you get everything on one day. You never really go above it. You go sideways for 5 days, then it starts selling off. You come back down. Not a bad pattern. Yesterday, 2.3 million shares, right? Or even you actually had to get back. You had 2.3 million shares on the 22nd. You go sideways for 5 days. You pop today, but 627,000 already, just compared to 1 million yesterday, is not attracting a lot of folks. Now, maybe I'm all wet. Maybe Monday comes in. I'm not telling you to pull the trigger now. I always loved that sign that said parachute complaint forms are here. Of course, no one ever comes to sign a parachute complaint form because you only use it once if it doesn't work right. But, you know, here today, you should be getting volume. You are not in this pattern. And, you know, maybe it comes along, maybe we do nothing, and maybe everything turns to dust for me next week. But everything is pretty much worked as I've thought it was, as we've talked about it on the show for the last 10 days. I thought we'd push down. I thought we'd push up, but I thought we'd push up even higher than we're at. We haven't done that quite yet. Anyway, a day on no volume for a lot of stocks that should have some volume after they pull back on light volume, as Skyworks Solution has today. You got, if you do the IDB thing, they say you better have volume in 3 days or it's going to be a failure. We'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Vic asks, is there a scenario where I go short the end of the day today? And the answer would be yes, if I thought this was nothing but a small retrace, or we were going to have nothing but a small retrace in the market. As I said, I've got so many stocks out here that haven't really come back. They've had a good trend line higher, and the best thing I found for that is the 3x3 displaced moving average. It'll come back and touch it. It just stays over it, but it's good indication that you're on a ballistic move higher. You get a handful of days after that. I'm showing dust here right now. So if you were thinking about going long, I would love to see this move back above this trend line. And then the next move lower. That would probably be a pretty good indication to say to go long gold miners. We talked about that for a while. I kind of thought that we had at least some level of consolidation down here that was going to go on before we have anything. But almost all of these things tend to come together at once. There's the thing I occasionally do talk about, light. If you have a regular light bulb that's 100 watts, it's okay. you put 100 watts into a laser, you can bounce it off the moon and get it back to you. And actually, so if light is coherent or the markets are coherent, that's one thing. If they're all just a mess, like a choppy sea, that's another thing. And we're kind of at that end of the choppy sea kind of thing, where we're starting to see all these things start to line up in all these different sectors. So next week, I think I'm going to be incredibly right or incredibly wrong. But again, I am waiting for a little bit of a pop in a lot of these and then a gigantic failure. So when you can, not when you have to. Hang on for Tom O'Brien to wrap up the end of the week.
Building wealth trading in the stock market seems impossible.